Thank you very much, Contessa. Large conference in the world, 2,000 independent investment advisors, all trying to figure out what 2020 is going to look like, trying to figure out what the coronavirus is going to do in terms of the impact on the stock market. Brendan Ahern, one of the great China experts out there. You control many China ETFs. You just got back a few days ago from Beijing and Shanghai. You're just on the conference panel here. Tell them what you're telling everybody about what is the right way to look at this, or what you believe is the right way to look at this.
Well, it's a very unfortunate situation. We don't know exactly how things play out, but we think this very severe flu-like virus is affecting the elderly with pre-existing health conditions. And I think in China, where there is a higher level of smoking, it's being particularly deadly. But I think if we look back at what happened with SARS, this is very likely to be a very short blip and a great buying opportunity.
Well, you had a very interesting chart that you brought along with you of the Shanghai Stock Exchange during the SARS epidemic. This was about November, December of 2003, and very interesting parallels. The Shanghai Exchange dropped 13% from its high to its low, and as you heard from Contessa, we're down about 10% recently. The problem is we don't know if the tracking is going to be the same here. Isn't that the issue right now, even though there are some parallels?
It's very true. We don't know exactly how this plays out. Certainly the Chinese authorities are taking very severe measures to try to contain travel mass groupings in China.
Yeah, now we're looking at the Shanghai Exchange. This is 2003, and you can see the decline there. What's interesting here is the KBA, which is the China ETF you control, is down today, down the last few days, but China is not open. Hong Kong is closed, and yet, by the great miracle of modern technology, you can trade these ETFs here. Do you find that even when the main market is closed, these ETFs will trade somewhat accurately compared to if they were actually open, the markets were open?
Yeah, exactly. So KBA is open for trading, but the underlying market is closed till next Monday. Historically, it has been fairly accurate, that the wisdom of crowds is very accurate, that the market is predicting somewhere between a 6 and 7% decline for mainland China when it reopens next Monday. Of course, things could change very dramatically, positive or negative.
And there's a lot of concern this could dramatically impact China GDP, perhaps as much as by 1%. Is that feasible at this point? Is that a possibility?
You know, if we look back at the effect of SARS on the economy, it had a very de minimis, very short-lived effect. And that's why we believe if you have a longer-term perspective, it's a great buying opportunity. SARS did not have a meaningful impact, and we think it's unlikely that this latest will either.
Xing out the effect of coronavirus, what is the current state of the Chinese consumer? They've been buying fairly regularly. Obviously, the trade wars affected them to a bit. Is the Chinese consumer buying more this year? Is it going to get worse or better in China?
We think 2020 is a great year for the Chinese consumer and the Chinese economy. The government is still stimulating to try to offset the trade war. With that impediment going away, we think we're in a troughing period and coming out of it.
We're seeing a lot of investment in China. The MSCI, other investment companies are changing the weightings for China. They're going up every single year. What's the implications for the international investor?
As the world's gravitated to passive investing, 700 of the 1,400 stocks in MSCI Emerging Markets are Chinese companies. We want to skate to where the puck is going, and certainly KBA is that definition of mainland China going into indices.